Hi, it's David here with Futures Trading. If you were able to catch this morning's video, I'm not certain if you were, left that there. That was right about six something this morning. I left that there for you. If you were able to catch that video, I told you that on the daily, they can definitely go back up. All right. So I gave you some targets below too, just in case they wanted to actually turn from this zone. And I told you on yesterday, they may be starting to work on that with, how they came off that high yesterday. But they're still at it. Okay. So they're still at it. And again, still be cautious because until they clear this zone here, and at least by one tick, that's all they need to do. Get outside of it by one tick. Just be a bit cautious. That's all I can tell you. This is exhaustion right here. These moves on the top, these wicks. We'll talk about that another time. But just know that that's exhaustion. So it's a chance now if they can accelerate and just close outside this high and then pull back well outside the zone. That'll be good if they can accelerate, get up here, close outside the zone, then pull back. Awesome. If they pull back, clearly they're coming to at least here, I believe. Then they should turn back up and go get this target. Now this is where they're going. This is exactly where they're going. You can kind of anticipate that to happen. It's just the how. So hopefully they can go ahead and again just get right outside this zone. That's proof to go higher. All right. Now once they do that, they tend to, drop back. And so that's something you'll want to pay attention to. Now on the chart here with the ranges and the statics here, I kind of outlined where we were at. And if you go back and watch the video, we were right here. And we drove down the bottom of the range and just kind of held that for a bit. Hope you're using it. Hopefully it'll benefit you. If not, I'll have the links below. You can click on and learn what that is. We had the news come in here, play support. Now, when I say support, what I'm saying is no violation outside the zone. Where you hit the zone, then you turn out, outside of it and move. So they popped up, ran to this one, played no resistance on this zone. The first zone is this, the stop, would go right outside that by one tick. Turned around, dropped back down, came back up, overshot the zone. And then, of course, this is what we did, turned around. Now, this is a no violation support. I tried to leave the zones exactly where they, were in the first video. So you don't think that I've changed anything to accommodate the market's movement. So I left the zones where they were, but if you're coming, if essentially, if you're coming down towards them, it would be support, but you'll have to flip it. You'll have to, and I try to state this in each video so you'll know you will go from 25 down to 15, and then from 15 you would go down to the '05. So you would flip the zone upside down and put it on this side. So them coming back down, them not passing '05 is important, and then there's the turnaround. And so we had no violation resistance here. Based on exactly where the zone was at, I try to leave that there for you. And then we just had this no violation support where if they're coming down, you would flip the zone from 95 to 85, and then you would go from 85 down to 75. You will pull the stop. Well, you put the stop reference down at 75. So you want to make sure they don't violate 75. And so they dove down right into that 80, turned around, and then there's the push up. Of course, you had this no violation up here in this zone as well. You can see them doing it here. They just tagged the back of it to the tick. And the back of the zone is 25. So let's check that high here. Yeah, 25 to the tick. So they hit it to the tick and they're turning off of it. Are they going to go down? I doubt it. I think they're going to go even higher. I did tell you this morning that we had a target on that high as well, so they can go back up. And I said that in this morning's video. And so them turning back around, that definitely makes sense because you want them to get through that daily zone, both of them, and clear them, so we'll know for certain that they're not going to so much turn around right now. I do believe that it can happen before it gets to that target. If not, yes, it should be an acceleration up, and that's what we need. So but there's the this morning's alert. If you're not using the static levels, you can go with the zones. Okay, so that's the London here. I'll kind of shrink this up here so you can see it. That's the London overnight zone here. You can, they set the zone here. They fell out of it. Resistance came down, chopped around for about 2 hours. Kind of holding you steady for that news. Played both sides. Now they're coming up through it. If you want play support from above, you just want to play the actual ranges, play support from above, and then target the overnight. All right, and so there's the support off of the overnight zone, or the overnight range here for the move up. So if you don't want to trade the zones and it's too much to draw on your chart, I totally get it and I understand. I'm trying to just give you two different ways of trading it. You can trade, actually, you can trade the third way as well. and I put that in the video in the range video, the statics and the chart scale. So you can do that too. And all you would have to do, and I'll just touch on this really briefly here. It's prices moving up, the center of the chart right here. Okay, center of the chart right there. You can say, hey, you stay above the center of the chart, I'll stay bullish. And then of course, you take this upper half and you divide that in half as well, and you kind of zone that out and say, okay, well, if you can stay above here, even the more so. And that's all you do. You take the center of the chart, because the time is moving forward. Time has everything to do with everything that will happen on that hard right edge, and so it doesn't change. It's nothing about hindsight or anything like that. If they can stay above the mid of the chart, you're bullish, without a trend line or whatever. You're bullish, and if they can definitely stay in this upper part, even the more so. Now, the only thing you have to look at is the percent of what would happen if they go to turn. They're going to come here to this midpoint, up in this upper region of the chart. They're going to come here. There's a high chance, and I mean it's well over 70% chance they're going to come here. And so it decreases, for them to come here, and then of course it definitely falls off dramatically for them to come back to the lower half of this chart down here. So if you don't want to trade the range, if you don't want to trade the static levels, divide your chart up. That's another easy technique. So if you're new to trading and you don't know anything about it, hopefully that'll help. So don't think that they have to turn around just because they went so far. I know a lot of people be thinking that, well, they already went so far. I don't want to just get in. Just don't worry about what's happening so far down here. Just try to grab, your upper half. First you get your center, then you grab your upper half, and then say, hey, as long as you can stay in this upper half, I'm bullish, and that's all that is to that. So I wish you all the best with your trading. Again, they should definitely keep going. We just want them out of that daily level. All right. So I wish you all the best with your trading. Take care.